Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And there are some technical indicators out there that everybody seems to know about, and then there are others that a lot of people just haven't quite discovered yet. And we're going to be talking about one of the latter, and that is we're going to be exploring something known as the stochastic distance oscillator, introduced just in 2023 by Vitali Apparini. And as I was doing my typical research before any of my webcasts, I always like to see what other people are saying and talking about regarding technical indicators. I got out there on YouTube, looked around for what other educators or other traders were saying about this indicator. Couldn't find any other videos. I've talked about it in the past a long time ago. I think Mike Fairborn did once as well. But yeah, today we're going to be talking about trading the stochastic distance oscillator. So if you haven't traded it before, you're not alone. But before we can get into this discussion, first of all, I want to say hello to everybody who's already chatting in out there in YouTube. Great to see all the familiar names. Great to see some new people here as well. But hello there, Sharon, Michael, Chris B. We have Jay Richardson, Ricebird, Greg, Grace, Amy, Eric, Life in the Fast Lane, Robert, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you are among those who are here for the very first time, I do want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, well, enjoy the recording. It is a great way to watch these webcasts. But if you'd like to be here in the live stream, this is a Friday webcast series, and we kick things off promptly at 1 Eastern time. Now, I also want to let my live stream audience members know that my very good friend Kevin Horner is hanging out there in the chats. Kevin and I have been working together for years, and he's just going to be keeping an eye on questions that come in through that chat window on YouTube. And if I can't get to those, he's there to pick up my slack for me. Thanks for having my back there, Kevin. Kevin and I would also like to issue an invitation to everybody watching, whether you're here live or you're watching on the archive, to follow your favorite Schwab presenters on social media. You can find us on X, you can find us on LinkedIn. It is the only way to connect with us when the camera's not on. But you can find Kevin on X at Kevin Horner CS. My handle there is at Cameron May CS. You can also pop over to linkedin.com/in and then /Cameron May CS again, and that'll get you to my profile there. Give me a follow there. And if you reply to my posts on social media, I just try to reply right back to you. But let's get into this discussion. And as we do, of course, we need to consider the risk of what we're discussing. Trading and investing carry risks, so we need to bear in mind this important information. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so with that said, let's set an agenda for today's discussion. First thing that we're going to do, as we always do, is just quickly follow up on current positions we have in our example paper money portfolio. Then we'll take a peek at what's going on with the markets through the lens of what we call our trend value momentum strategy set. And then we're going to spend the rest of our time talking about this stochastic distance oscillator. It's just an indicator not a lot of people have discovered, but it's a momentum indicator that's intended to hopefully assist a trader who's trying to find those short-term highs and lows that can be so difficult to track down. And once we understand the indicator, we're going to build an example trade with that using typical entry and exit signals from that indicator. All right, so let's get right into it. Oh, there's Mighty Quinn checking in from the live seminar in Orlando. Great to have you here. And I saw somebody else say that they're new, so great to have you on board. Let's go right to the Thinkorswim platform. This is the desktop version of Thinkorswim, and we're in the paper money trading platform. But right now we have 3 example current positions where we had what happened to Pfizer. We'll talk about that. But let's first look at our HWM position. It's just kind of treading water, so is our other one. But let's go have a look at the logic of those 17 shares that we purchased on HWM. So here's Howmet Aerospace. And this was a price pattern trade where we saw what appeared to be an ascending triangle pattern where the highs were holding generally steady at about 283. Lows were rising against that, maybe indicating that buyers were bringing in more momentum. We finally broke up and through. So we bought our 17 shares right there on that breakout. We measured the distance of that pattern and projected a potential target using that up here to about 320. And you can see initially we've gotten some shifting back and forth. Now, I'll have a few more things to say here about that signal in just a moment, but I want to say hello first of all to Ben Watson and the crew out there at the Orlando workshop. He says we have 800 additional traders checking in. Man, it's great to see you guys. My name is Cameron May, and I'm just doing what I typically do on a Friday. I meet together with maybe, 150 of my closest friends, and we talk about technical trading of charts. So right now, we're reviewing an existing position on Howmet Aerospace that was taken on a price pattern entry. But let's get back to this. Let's get back to this trade. So we took the entry, and a typical assumption here when we see a breakout from an ascending triangle is the technical trader might be expecting a move potentially as much as the start of the triangle pattern. So we measured this distance here, projected a potential price target up at 320. Didn't seem to get off on the best footing though. Initially, we started to pull back. Well, we had a plan for that. We have a stop down here at 270, and that got teased in a significant way. We came right down about a week and a half ago, got down to a low of 270 and 25 cents. Just missed that stop, but we rallied up beyond that. Now we're getting up close to our target. Didn't quite get there either, and now we've kind of faded. We're back to about what we paid, a little bit less. We were doing a little bit better this morning when I was first looking at it, but we still have a plan in place to either take our profit or, trim our losses. But just remember, we have a stop here. It's not a guarantee that we'll sell at exactly 270 if we get a strong move down. All right, that's the HWM position. Let's look at another one that actually kind of turned out pretty well. This is our PFE, our Pfizer position. So let's go to the chart of Pfizer and revisit the logic of this trade. And I'm going to load up a different study set here. Let's go up to our studies. Let's load up the Pfizer Market Forecast study set. So the Market Forecast tool, it's a tool that's only available on Thinkorswim. And what we saw on this tool was our 3 stochastic oscillators all falling into the oversold range on the same day, creating what we call a bullish cluster. And so we took an entry on that signal, which also seemed to coincide right with this 12-month low. Took our entry right here, had an initial stop down below that support level, but as price ultimately started to perform, we subsequently moved that stop up to about 24.25. Got fairly close to that stop. It was never triggered, but just over this last week, Pfizer has staged another strong move, and it actually got up to our target of 26.50, which was just looking to get back up to those previous highs. So Lou says, what was the study called again? It's called Market Forecast. You can actually look right here in the upper left of that study window. It's the Market Forecast tool, proprietary to Thinkorswim. Basically a combination of 3 technical oscillators known as stochastic oscillators. But if you're not familiar with this tool, let me make a suggestion for you. There are going to be several tools that I make reference to today that we discussed in great detail in previous webcasts. And if you want to go get caught up on those, you have some great resources available to you from Schwab Education. And it all ties back to our YouTube channel. So if you're new here, make sure you subscribe to our channel. You can just pop down below the video, click on the subscribe button. It only takes a second. Doesn't cost you to do anything. It doesn't cost you anything to do that. But our Trader Talk Schwab Coaching webcast channel is where you can join these live streams, but you can also find playlists of previous webcasts, and you can just sort through them. Like if I click on playlists and I want to find this webcast series, Advanced Charting Techniques, I can just scroll down. We have a bunch of different series. This one's about at the halfway point, right there. Advanced Charting Techniques. I can click on View Full Playlist, and I can see last week's discussion about anchored VWAP. We can talk about or we can review the discussion that we had about the 3 lies that bullish charts can tell. But another thing that we can do from that channel is to do a keyword search right here. So if you've heard about the market forecast, but you don't know anything about it, you come here, do a keyword search, and there's my discussion of using the market forecast tool for short-term stock trades. All right. So let's get back to our trade here, though. Pfizer, yep, hit our target. That trade's done. That one was a 10%-ish gain. We made about $960 or $240 per share. $240 per share, $2.40 per share. $240 would have been nice. Nope, it's not what we did. 115 shares at $240 per share profit, about a $960 gain. So now we just have our Wells Fargo. What's going on with Wells Fargo? What was the logic of this trade? Let me switch up our study set again. I'll load up our Wells Fargo anchored VWAP. This was last week's trade. And last week we bought 115 shares. I think I said we bought 115 shares of Pfizer. How many did I actually buy? Can't remember. I'd have to go check. It wasn't 115 because that's the Wells Fargo. Anyway, we did make 240 per share on however many shares on Pfizer. Oh, it was 400. That's what it was. We bought 400 shares. Anyway, the 115 shares that we have of Wells Fargo purchased right here on the evidence of a combination of anchored VWAP signals. Now, if you're not familiar with anchored VWAP, it's very similar, not exactly the same though, to Bollinger Bands. It uses uses a moving average line with a couple of standard deviation lines drawn above and below it to identify potential entry and exit signals. And in this case, what we saw was that we pulled back down to that VWAP line from the original anchor point, and we're starting to bounce up from that. But we anchored a new VWAP line at a very recent strong reversal point here, which is kind of typical anchored VWAP technique. And that provided us with a little bit less aggressive target to the upside. What we're looking for here is for price to see if we can reach up to that shorter-term anchored VWAP. We got close, didn't quite get there. We do have a stop in place down here at 81 in case the trade breaks down. But right now, just up a little bit. It would have been more fun to talk about it yesterday, but that's where we are. All right, so those are our current positions. So let's see what's going on with the markets, and then we're going to dig into the stochastic distance oscillator and use that for our new trade. So we're building out our tool set, and actually we're going to have a shiny new tool here that not a lot of the people have in their tool set. But let's go to the SPX, and I'm going to switch up this to our trend value momentum strategy set. Once again, if you're not familiar with this strategy set, you may want to pop over to the channel, do a quick TVM keyword search, and there's the introduction to the trend value momentum chart trading system. All right, but back to our chart. Really what we're looking at here is a combination of 3 technical signals, looking to see, are they bullish or are they bearish? And one is for trend, one is for conceptually value, another one is conceptually for momentum. So our trend indicator is a 50-period triangular moving average. It's a smoother moving average than maybe some others that we've used. So it's a 50-period triangular moving average or trend line set against a 100-period, kind of a longer term moving average or trend line. And if our shorter term is rising still above the longer term, that's typically interpreted as still being a bullish confirmation for trend. So through that lens, I would say, yep, check for the bulls for trend. What about value? Well, one indicator is sometimes used as a potential indication of short-term value, even within a nice trend. A stock will tend to move through, or indices also might tend to move through sort of a stair-stepping cyclical pattern. And within that trend, there may be potentially better times to enter new bullish trades and worse times to enter bullish trades. entering hopefully at short-term lows rather than at short-term highs. So what we're looking for here is near-term value. And for some, what they'll look for is RSI down closer to 40, which might be oversold in the short term, potential area of value, or is it closer to 70? That may be close to overbought. Right here, it's still bullish. It's still rising towards 70, but kind of getting close to that overbought position. To some, that might cause them to say, all right, bullish, but with an asterisk. I'm still going to say, check for bulls for trend, check for bulls for value. And then finally, we'll have our momentum oscillator down here, which in this strategy set is the MACD histogram. And a trader here very commonly will be looking to see, it's sort of a tug of war between buyers and sellers. All right. And generally, if the indicator is low and starting to rise, that might mean that the sellers have had control of momentum, but the buyers are starting to regain that control. If we're solidly above zero and we just have green histogram bars, might just say that the buyers are, it might be typically interpreted as buyers having more firm or solid control of momentum. Somebody just asked the question, oh, why might you want to anchor it to a specific bar or date regarding the anchored VWAP? Good question. That was last week's topic. You may need to go watch the archive for that. My apologies. I don't have time today to go back and revisit. It's a legitimate question, but the answer is going to lie in last week's video. Okay. But let's just say here, the bulls still have the momentum, maybe getting a little high. Sometimes when we get up high, we may hit an exhaustion point and the sellers may take over. We'll see. But here we might just say, check for the bulls, check for the bulls, check for the bulls. One other thing I want to note before we move away from our SPX chart is, and I'm going to zoom in on this. Let's zoom in, click and drag, just zoom in. We had a pretty strong move over about a week period of time right there. And then a bit of a pullback. Could that be a bull flag price pattern? And are we getting a breakout of that price pattern? Might be. Could be a continuation. Not a guarantee, but from at least a couple of technical perspectives, maybe the evidence is starting to mount toward bullishness, at least through that lens. Time will tell whether that proves to be accurate or not. But we're going to go ahead with a trade today, a bullish trade. We're just going to buy some stock today, but we're going to do that using this stochastic distance oscillator. And to learn about that oscillator, I'm going to use the symbol PNW. I found this stock using a scan that I built this morning to assist us with finding stochastic distance oscillator setups. I'll show you that scan toward the end of today's discussion. But let's switch up our study set. I'm going to remove our TVM strategy set. And let's add this indicator. So if you're not familiar with how to add an indicator on Thinkorswim, you click on the little flask icon. We can go down in alphabetical order, or I'm just going to type in stochastic and find the stochastic distance oscillator. We're going to add that to our chart. And as we do, this is already starting to tell us some important information about this oscillator. So let's just make a quick note of some numbers here. 12, 200, 6, 40, minus 40, and then the word exponential. I'll explain what those are. Let me click apply and click OK on our chart. And there's our oscillator. So I want to talk about, first of all, the concept behind the tool. Then we'll talk about how it might generate entry and exit signals for a trader. And then we'll plan and place a trade using it. But so this was introduced by Vitaly Apparini in 2023. And the concept of this oscillator, as with a number of other oscillators, is to try to identify highs and lows within a chart. Now, for Vitaly, he was trying to identify extreme highs and lows. Well, what in the world is the definition of extreme highs and lows? Well, according to his definition, it was, we're going to look at the distance a stock has traveled over a 12-day time frame. Why 12 days? 12 days is roughly, 12 trading days is roughly half a month. And some traders have observed that markets and stocks might tend to move in sort of month-to-month cycles. Obviously not perfect every month, of course not. But yeah, you may notice with Pinnacle West, we'll have this sort of stair-stepping cyclical behavior to price. So what Vitaly is attempting to do here is identify, well, if we're moving through these cycles, when have we reached a cyclical bottom or an extreme low? When have we reached a cyclical peak or an extreme high? And his definition for that starts with 12 days, because if a cycle is a month, half a month, traveling either from a low up to a high or from a high down to a low, might be roughly 12 days. And so what he does is he looks at what his indicator does, it looks at the distance traveled over a 12-day period. And then it compares that distance. Notice that it's called the stochastic. Stochastic is just an oscillating type of indicator, just moving from highs to lows. But it's the stochastic distance oscillator. I'm going to show you that. Let's come up here, actually. I'm going to show you a little bit behind the scenes. Let's sort of peel back the veil or lift the hood on this indicator again. So we're going to come back here to our Edit Studies. And I'm going to click on the little gear over here, which sort of opens up the indicator innards, right? But right here it tells us it says momentum length, it's just basically a 12-day study. But it compares the distance the stock has traveled over the last 12 days to every other 12-day period for the last 100 days. And what it's attempting to do is determine, well, is the distance traveled during this 12 days larger or smaller? Is it disproportionate in one direction or the other to what we might experience over a typical 12-day period? All right, that's it. Now, this portion where I explain how the indicator is built, yeah, it's going to take a little bit of processing to really latch onto it. I'll do my best to explain it. But that's what it's really looking for. So if we get a really big move, let's say to the upside, an unusually large move would carry us to a value in his indicator above 40. That would be considered to be an overbought condition. Boy, stocks have really gone to an extreme high. They might come back. If we have a particularly strong 12-day period down, that might carry us down to minus 40. Now the next question is, where do you come up with the 40 and the minus 40? It is an involved algorithm. Sometimes I'll break out the precise algorithm in these webcasts and explain exactly how it's generated. I'm not going to attempt to do that today. It would take me the rest of the webcast. So you can Google it. It's publicly available if you want to see that. So we're just going to talk about it conceptually, just to streamline the discussion today. However, here's one issue that just looking at the last 12 days compared to average 12 days over the last 100 days, sorry, that's a bit of a mouthful, but that's the way it works. Just a single day can have a big impact on a 12-day indicator. And it can cause our oscillator to jump up and down in kind of an unusable way. So Vitaly also added a 6-period smoothing element, a moving average, embedded within this indicator. So all of this adds up to looking to see over a 12-day cycle, are we making sort of normal, small moves or big, large moves, either up or down? So what does that mean for the trader? Well, as with so many other stochastic related or oscillator related indicators, we're looking for overbought conditions as potential pump the brakes on any new bullish trades, hold off, wait for an entry, or oversold conditions may present potential entry signals, right? So you'll notice we have two lines here. One is at minus 40, one is at plus 40. And so let's shift to, when is a buy signal generated? There are two potential buy signals. One is when our stochastic distance oscillator line drops down below the minus 40 line and then starts to tilt up. So here we're down below minus 40 and we're starting to rise. This might be considered by some to be an entry signal right there. See how we started to rise? That looks like that would have been right, I think, right here on this white candle. Now, other traders might actually wait for the oscillator to rise and get back up above the -40 line, as we have right here. That generates a little bit later signal, but it might eliminate some times when the oscillator goes down below 40 and then kind of goes sideways for a while, and the stock just continues going lower. So that's sort of a preference. It's a preference decision that's left to the trader, right? And you can see some other examples of both. There's one here. There's another one here. Interestingly, what's just happened recently with PNW just over the last couple of days? Yeah, that's why I have this as an example. I found it using my scan a little earlier today. So those are the two example entries. Well, when are exits taken? Well, there are a couple of potential exits for planning where to take profits. The first is to look for a recent high. Because this indicator is generated directly by price activity, if it is going down, if it's gotten down below -40, price has come down before that. So our trader looking for price lows will note that a signal is effectively always preceded by a recent high. And that might become our trading target, like right here. Looks like that was about $94. The high leading into this run down in price. And so if we have an entry down at this low, maybe we're just looking to get back up to that high. In this case, it took a while to get there. Now there is a second signal that's not generated from the price chart, but from the oscillator itself. And that exit signal is if the oscillator gets up into the overbought range and starts to head down again. There's actually the slightest downtick right there. So we got up above the overbought range, above the +40, and then started to tick down. That looks like that was a sell signal right around here. Interestingly, the two were pretty close. That's not always going to be the case. In this case, not too different. Bogus Chinchilla says our divergence is also potentially significant. They might be. It's not something that I personally tested. And it's not something that's explicitly written into the traditional trading approach to this oscillator. Now, a divergence, by the way, would be if price is doing one thing, like here, price is making higher highs, but our oscillator is doing another thing in the opposite direction. So lower highs in this case. And, in this case, that divergence was followed by a period where the stock didn't do much. So I don't know, it might be worth investigating. Good question. All right, so that's the fun side of the trade. We now know when we might take entries. We know when we might take profits. Well, sometimes these trades just don't work out. So when might losses be taken? Common approach to managing the downside of the trade is to look at the lowest recent candle low. So you could use any of these examples. Let's see. When was this entry signal? That was right here. Looks like we had our entry signal right about here. Oh, let me switch my drawing tool. There's our oscillator signal. Yeah, it looks like it was happening somewhere around here. What was the recent candle low? That was probably this red candle or that red candle, right about 97.90. And we might go a percentage point or two, $1 or two below that low, because the signal is supposed to catch the lows. And if it's wrong, how long do we want to wait around insisting that we were right when price disagrees? That's the concept. So using a technical indicator, some people like to do it, but they typically will have a plan for if that indicator generates a signal that's turning out to be unprofitable. No technical approach is perfect. All right. But Pinnacle West is very likely going to be our example trade today because it's given a recent signal. But just trading the indicator itself is actually not what Vitali proposed. Commonly, this indicator is used in combination with a trend indicator. Because if we're getting a bullish signal on a stock that's going down, for some traders, that's just sort of a no-go. It's not the way everybody does it. But let's add a trend filter. And what I'm going to do is let's add a trend filter that's kind of tailored to the time frame of this oscillator. This is something that doesn't generate signals very often. Generally, we might get 2 to 4-ish in an average year. If it was generating lots of signals, it's not doing its job at looking for extreme lows, right? So 2 to 4 signals. Well, if we're combining a relatively uncommon signal with a really fast moving trend line, that just it's not a natural pairing. So let's use kind of a longer term trend line tool. I'm going to come up here and let's stick with the triangular moving average that we've used in the past. Let's add a 100 period triangular moving average. And for some traders, when they have this trend tool, the first requirement before they even start looking for a signal is for their trend line to at least be upward sloping. So do we have an upward sloping triangular moving average right now? We do. Yep. With that view of trend as a pre-qualification, now the trader might start looking for bullish signals, which seems to be the case on Pinnacle West right now. So now you ask, okay, Cameron, so how did you find this? I'll tell you, this is not a common signal. It's kind of hard to find. So it's useful to have a little scan tool. Let's go build a scan tool. Now, I already have one built. I'm going to see if I can rebuild it under the pressure of having everybody watch me do it. All right. So what I've just done is I switched my Thinkorswim platform. I have the paper money platform right here. It's the white one. I have the black one. This is like a fake live account because the scan that we're about to build can only be built using the live platform. It's going to be using what we call study filters. They're not available on paper money. And yes, you can have paper money and live open at the same time. Just launch one and then right click on the Thinkorswim icon and launch the other one. Log into that. All right. Singh is asking, with current market trending, it's becoming very difficult to trade with the system. Now, if anyone can tell me if there's any indicator like this which can catch the first signal of buy and sell. Wouldn't we all like to have that signal where we know exactly when to buy at the moment of a trend shift? When I find the perfect signal that catches that every time, I will make a webcast about it the day before I retire. Anyway, but let's get back to this, to searching for this signal, this quite uncommon signal. So the first thing I said was, well, we need a trend line going up. That's a common filter. So we're not going to be using any of these default stock filters on the scan, on the Stock Hacker. Let's just take those out. Instead, we're going to be using 4 study filters. I'm just going to add them all. 1, 2, 3, 4. And the first one is going to be that triangular moving average, right? Now this is going to be a custom study filter. And this, I realize that not everybody's going to be following along perfectly with how to build these things. If you haven't ever used this before, let me just do this. You know, just remind me to share the scan when we're done, okay? But let's go over here. Let's put in a custom scan, or a custom filter, and we're going to add the triangular moving average study. So we're going to select study. Let's type in triangular moving average. And specifically, we're looking at the 100 period triangular moving average. And here's the requirement that I'm going to make. I want the triangular moving average, the 100, right now to be higher than it was a month ago. All right? What does that imply? It's probably trending up. So our 100 period triangular moving average, we want that to be greater than the same thing. Let's look up a triangular moving average of 100 days or periods. but we want today's to be greater than 21 days ago. That's known as the offset, 21 days. So I'm just going to click Save. And by the way, when I say within one bar down here at the bottom, it means right now that needs to be the condition. So let me click Save and click OK. And you'll see right here it says moving average triangular, the 100, is greater than the moving average triangular 100 from 21 bars or days ago. Now, it's possible that we might get a 100 period triangular moving average that's actually been coming down for a long time and it made a little teeny dip upward. And so it's not actually terribly bullish. Another requirement to filter for that I'm going to add is that our stock price isn't trading way down at 12-month lows. Let's try to get it up there at or just within, let's say, a range of 12-month highs. For this, we're going to use price performance. So for the study filter here, price performance near high lows. We're not going to use the lows, we're going to use highs. So near high lows, current price is within, let's just say 20%. Doesn't have to be right at those highs. Matter of fact, with price coming down to extremes within the last 12 days, yeah, it's going to be off those highs. So let's put in 20% of the 252-day, or in other words, 1 year high. So that's our second requirement. Now we're getting down to the nitty-gritty. Triangular moving average up, price trading within 20% of its highs. What is the stochastic distance oscillator doing? Well, first thing what we might want is for our stochastic distance oscillator to be below 40. But then we also want it to be below 40, but kind of tilting upward. So we can put both of those in here with a custom requirement. Let's delete this ADX default. Let's add the stochastic distance oscillator. There it is. And we're going to, first of all, require that it's less than a value of minus 40. That's down in the oversold range. And we're going to require that that's the case today, within one daily bar. So we are right now, that value has to be below minus 40, okay? Stochastic distance oscillator is less than minus 40. Yep, that's what we want. But finally, let's say we want it to be less than minus 40, but higher than yesterday. That means that we're definitely going up. So let's delete this. Let's add our final study condition of the stochastic distance oscillator. Oops. There we go. We want it to be greater than it was yesterday. So same study, stochastic distance oscillator. From 1 day ago. And we want that to be the requirement just today within 1 bar. Okay. So if you want to revisit the logic of this, we want the stochastic distance oscillator to be greater than the stochastic distance oscillator offset by 1 day, yesterday. Click Save, click OK. And I think I did it correctly. Honestly, I've only built this thing once, so I had to do that entirely from memory, so everybody can applaud quietly while we run the scan. And let's see if there's any stocks that meet this criteria. Oh, there's one other thing I wanted to do. Would have saved us some time. I want to run this just through, let's say, companies in the S&P 500. Let's do that. It's thinking a lot, and it just found quite a few stocks. Let's scan just in the S&P 500 to narrow that list from a whole bunch of stocks. Yep, look at this. We have Altria Group and we have PNW. Jenny, thank you. Appreciate it. There's the support I was looking for. Anyway, yeah, there's our PNW. That's the scan. Let me share it because I said I would, and I'll put it down in the video description as well if you're watching on the archive. But let's share this scan. And I'm just going to abbreviate it to SDO, stochastic distance oscillator. And let's put it in the chat. There you go. Just remember with shared scans, there's not a guarantee um, timing, or what else am I trying to say? Trying to get this done quickly. Yeah, they're not guaranteed as to timing or accuracy. There we go. All right, but let's go place our trade. So with this, it looks like our target might be up there right around 110. Let's just say 110 is going to be our target as price is rising at 102. Our SDO is rising. Low recently was down at 98 and a half. Let's put our stop down there. How about we say, ooh, we have a low right back here as well at 97 and change. Let's put our stop right down at 97. So target at 110, stop at 97. And let's go place our trade with $10,000 to invest. It's basically 100 shares. So let's right click on our ask price. We're going to buy custom with an OCO bracket. Buying 100 shares. I'm actually going to submit this as a market order. I know that's going to make some people's blood pressure rise. We should think about the risk of what we're doing when we enter a market order. We're saying we'll pay whatever price it takes to get into these shares. And it may be more than what we're thinking. So there is definitely a risk in doing this, but I do want to try to get that order filled. Let's put in our target, our limit order at 110. Our stop, what we're going to do is going to be 97. That's right. Let's put in our stop at 97. Good till canceled. And let's confirm and send this order. Attempting to buy 100 shares, just the market price. If we get those shares, we're going to have a target order up at 110. A stop order down at 97. Stop order is not a guarantee that we'll sell for exactly 97 if it's triggered. Could be less. There's no commission on this trade, but there can be on some types of trades, and we'll send that order off. And with that, we've accomplished what we set out to do today. Yep, bought 100 shares of PNW. I wanted to talk through this indicator known as the stochastic distance oscillator. It's not one that there's a lot of information on out there. So I hope this has been helpful for you. We'll follow up on this trade in future webcasts along with our 2 remaining trades in our example paper money portfolio. I hope that you'll join me again next Friday for another discussion of advanced charting techniques. But I do want you to be aware as I let you go of the slate of educational resources available to you from Schwab Education, starting with a quick reminder, if you haven't subscribed to our Trader Talks channel yet on YouTube, do that now. This is where we house, you can join our live streams. You can find our playlists of previous webcasts, and you can do keyword searches through those archives, just like we've done a couple occasions already today. So pop down below the live stream, click on the subscribe button. Doesn't cost anything, only takes a second. But another thing that Kevin and I would strongly suggest you do is to follow your favorite Schwab presenters on social media. You can find Kevin and me on X. You can find us on LinkedIn. For Kevin on X, go to @KevinHornerCS. To find and follow me on X, it's @CameronMayCS. Here's my handle. That's what my profile looks like. There's my handle. I post frequently on social media, and if you reply to my posts, I just try to reply right back to you. It is the place to communicate with me in between these live streams. So you can do it on X, or you can hop over to linkedin.com/in and then /CameronMayCS. That again is my handle here as well. And if you follow me here, and if you reply to my posts, and I just try to reply right back to you. All right. Everybody, thanks for giving me your time today. Kevin, we didn't see a survey, did we? I don't think so. Nope. If you see a survey, if you fill that out, that'd be fabulous. But I definitely appreciate everybody that's already clicked the thumbs up. We got how many people? 163 people watching, and 60 people have already clicked the thumbs up. That's always appreciated. When you click like on YouTube, it sends a signal to your presenter. It also sends a signal to YouTube. It tells your presenter, thanks. It also tells YouTube, hey, show this to other people. And that definitely helps. So thanks for doing that for me. I'm going to let you go. I'm going to see some of you again for market and sector analysis in just about an hour. Otherwise, I'll see you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck Happy trading. Bye-bye.